Hey there, welcome back to the channel. Today, we're diving into the world of investing and taking a closer look at the S&P 500 200-day moving average. Do you know what that is and why it's so significant in the world of investing? Stick around to find out. So, let's start with the basics. The S&P 500 200-day moving average is a key indicator used by investors to assess the overall health of the stock market. It helps in understanding market trends and making informed investment decisions. Now, let's talk about the challenge investors face in navigating the complex world of finance. Understanding market trends can be daunting, but that's where the 200-day moving average comes in. It provides a simple yet powerful tool to gauge the market's direction. Moving on to the nitty-gritty details, let's explore how the S&P 500 200-day moving average is calculated. This indicator is the average closing price of the S&P 500 index over the past 200 trading days. It holds historical significance in predicting market trends and potential reversals. Now, here comes the key moment, when the S&P 500 crosses above or below its 200-day moving average. This event is closely watched by investors as it signals a potential shift in market sentiment. A cross above is considered bullish, while a cross below is seen as bearish. In conclusion, the S&P 500 200-day moving average is a valuable tool for investors to make informed decisions. By understanding this indicator, investors can better navigate the ups and downs of the stock market and position themselves for success. Before we wrap up, don't forget to like this video if you found it helpful and subscribe to our channel for more educational content on investing. Share your thoughts or questions in the comments section below. Thanks for watching, and see you in the next video.